Hey, good morning, guys. My morning brief video here. Some things I got going on here. I'm going to start with the dollar real quick here. So we have an evening star on our monthly here, evening star pattern forming here on the dollar. Depending on how we close the month, but if we close below that support area, that could be setting up for a reversal pattern in our dollar situation. So some things that I really want to think about here in the markets that we are at 15-year lows on the cash reserves in people's brokerage accounts right now. So it's a lot. The markets have been pushing up more on leverage than they are being pushed up by actual money coming out of trading accounts. So we have to be very mindful of this. That when we get in this situation, that it doesn't take much to really rattle the markets. And with that being said, we're also coming off an all-time allocation to U.S. equities versus the global markets. We are over 30%, never before ever seen in history. And part of the driving force behind that scenario was the strong trend in the dollar. So if we start seeing more of this dollar weakness scenario starting to play out here, and this is partially because of inflationary pressures in the U.S. That's hurting the dollar, and plus the geopolitical issues. Uh, uh, a lot of this money is probably going to move out of dollar-denominated equities and move into foreign assets, and we're already seeing that in Chinese equities and even an outperformance in European equities. So we have to be very mindful of this situation as it unfolds, uh, making it much more difficult to push U.S. equities higher at this point. So be very mindful of that situation. Okay. Okay, guys, this is my primary layout, uh, my quick and dirty layout of the overall markets here. So some things I mentioned in yesterday's video here was the ZNs. I was getting a little concerned with that. And we had some situations that are developing here that are putting a lot of pressure on higher yields. Okay, higher yields. So when the bonds go down, yields go up. Okay, so be very mindful of this. And I had mentioned yesterday that we had this was a head and shoulders pattern. Okay, right here, and we completed the upside target on that head and shoulders pattern. Came down, came up to 50% of that head and shoulders pattern. This is a textbook lower high scenario. So now we are potentially setting up for a lower high now here on the ZNs, potentially targeting all the way down here at the 107.17 area potentially here. So be very mindful of that. What's the pattern. This would be your textbook analysis for the bond markets. So we just want to definitely keep that in the back of our mind. What's going on with the bonds, suggesting that we are probably heading into a even higher period of inflationary pressures in the market. With that being said, if I go over here, one of the driving forces here is not the VX. Let me come back to that in a few minutes here. Okay, UNG. UNG, guys. If you go here on the 1 year, so we're right here at 11-month highs here on UNG. So we know the Midwest is really getting hit with a very strong cold wave here in the markets. What I do want to point out is that we have been putting in a positive divergence for a long time in UNG. So we have to be very mindful of this. This just isn't some sort of, this thing might have legs. So we have to be very mindful of this situation, okay? That we could actually be breaking out above you see the high up here? I mean, this is a 1 year, this is a resistance area of a 1 year high. So we could very easily be coming up to, if not breaking out, given the positive divergence we're seeing it build in here in the natural gas space. So it's definitely something we have to be mindful in the back of our mind that nat gas might have some legs here given the divergence we've been seeing in the markets. And typically in the late stages of a market cycle, you see an over outperformance in the energy sector historically. It's just the overproduction of uh, uh, over drilling of here in the U.S. Of to suppress price that has hindered that aspect of the markets. And energy outperformance for a period of time, that tends to lead to a market correction. Okay. And so we have to be very mindful that we're starting to see an outperformance of UNG that's starting to take hold here. We have to be very mindful of that scenario. Um, and then also in addition to that, we're already talking, if all things are equal, egg prices are still looking to go 20% higher this year, and that is one of our core basics to groceries. Okay, you got your soybeans, corn, wheat, all those things also feed into it, but eggs go into all kinds of products, and an additional 20% increase. This is all going to reverberate throughout the entire grocery industry on prices and price inflation. And groceries are one of the core inflationary uh, uh, signals that the Fed has to track in their planning for interest rates. So with what's going on with the egg crisis and possibly with the energy prices, this is putting even more pressure on the Fed not to actually cut rates and possibly even increase rates at some point in time this year if things get out of control. Remember, just one more bird flu outbreak and they have to slaughter a bunch more birds, and whoa, what's going to happen? Fed might all of a sudden might have to raise interest rates just off of that catalyst to the markets. So we have to be mindful of that scenario. Some events that are happening this morning: the VX futures, that's our volatility futures, they did roll overnight. So we do have a roll in our VX futures. And going into the roll, a lot of times what they'll do, they'll grow above support on the charts and find strength from there to rally. And what was happening yesterday, we saw a lot of VIX call buyers out to March before the row today. So I think there's a lot of fear from institutions that because of the row that we're having, this morning, that we will be back above support, and now uh, volatility can actually probably outperform here. So be very mindful. These cycle changes can have a big impact on the markets. So personally, I would like to see a back test of that support uh, before I would actually want to start looking to the long side in maybe the VIX. So that's what I'd be looking for this morning. See if we can get an early pop in the markets, bring this back down to support to actually start a new net long in volatility futures. So just be very mindful. And this is out into the March contracts. So um, just something to think about here. Some things I'm thinking about early on this morning. And something a little bit different here, VIX itself is actually gapping down this morning. Uh, so, so be very mindful of that as well. Uh, you know, uh, Bottom line is if we were coming in today and the markets were fearful at all, you wouldn't think you'd be seeing a gap down in the VIX right out of the gate this morning. So, doesn't look like a lot of fear hitting the market early on this morning. So things happening here. SMCI is continuing its recovery rally here in the markets. Intel's down a little bit after the big squeeze. We saw gamma squeeze to the upside yesterday, so we're seeing a little bit of reprieve in that. Tesla is looking flat here on TSLL. That's your leverage Tesla trade. Um, Nvidia hanging around this 140 as long. Looks like my personal feeling is Tesla's going to digest around 140 for a day or two here, and then we'll see what's going to happen from there. So be very mindful of that. Pretty much flat on FXI. That's your Chinese names. Tesla, pretty much flat. Palantir's flat. Not seeing any directional here. Flat. Got a little bit in AMD this morning. So AMD might be playing catch up with that rumor that Intel and AMD might be merging a little bit. So we got a little bit of bid at AMD this morning. early on this morning. PDD, which is a big underperformer in Chinese equities, it's actually finally catching a little bid this morning. So this is one that's been out of favor, and so it's doing a catch-up trade on these Chinese internets, taking a big deal move here. This is my primary grid, trading grid and stuff. I've already went through ZNs. I will be sharing a link below in the comments. If you guys just want my charts, if you have a Thinkorswim platform, I can share the link and you can have my trade grid and keep this up. And they should auto update if I got it set up right. So heads up on that. Now ES is right here. Things that I'm looking at this morning here. So Wednesday, the put wall is way down here. 6100 is our critical put wall. Okay. Heads up on that. We are potentially breaking below this critical trend line this morning. The risk reward, we have resistance right here at the 2 standard deviation. We have to be very mindful of that. Resistance up here at the 2 standard deviation. So quite mindful of that situation. Some things I'm looking at here. If you are a technical analyst, risk reward, go right here. This would be your risk reward scenario. Really not the best risk reward if we were to break down to that support. Right there, that's assuming that, that acted as support the first time. Just be very mindful here. This was a former fair value gap, still acting as support. Just not very good risk reward to either direction, in my opinion. So just be very mindful if you're trying to trade a directional trade here. It's better if we were opening down here, the risk reward would probably be better to the downside. So opening down here, guys, your risk reward would have been far. Let's say like we closed down here and we opened down here. That would be far better. Uh, so we do have a slight gap below us this morning because we are still up a little bit. That might be closed by the pre-market here. Um, so we're probably going to be closing the gap of right at the open this morning. Uh, so that's not really going to be a driving force on the open here. So it's going to be very difficult here. So this here doesn't apply anymore. This is from Tuesday. This was our Tuesday support. Okay, now that's going to be gone. So it's going to be a little bit difficult here to figure out what we're doing here. We do know we're breaking these trend lines. Just going to be a little bit difficult to figure out how we're going to play this today. And we do have major resistance right above us. Okay, guys, so we have even greater resistance on the NASDAQ right above us here. So we have to be mindful of that. If you were going to try to go long here, try to zoom this a little bit here. Bottom line is you would want to get above yesterday's highs because that's right into the resistance area. So you would be looking for in today's session. That would be your risk, your reward, potentially. Yeah, the backtest area right there. So your reward would be down doing the backtest, hard backtest. So we did do a hard backtest right here. Okay, we came down, and in my opinion, there were buyers who were stepping up down here. So that makes it very difficult knowing that as soon as you got down in that area, you were wicking out on the 1 hour. So that suggests, there were buyers sitting here waiting as of yesterday. So that makes it even more difficult. So if you're doing a risk reward analysis, after yesterday's trade, say right here, you're really only doing your risk reward down to the wicks. Okay, so that's a 1-for-1 risk reward. So it doesn't make very good sense to be trying to strike a directional trade on the NASDAQ, seeing all those wicks that have formed from yesterday. Okay, guys. So things going on here. So Bottom line is here, guys, that is our monthly call wall, and it's rejected again. It's rejected multiple times here. And just remember, the one big driving force for the Russell is interest rates coming down. And what we've got current situation we got going on here, interest rates are going up, and that resistance is holding. So the risk reward should be to the downside here in this. Okay. Unfortunately, we got these wicks right here that were defended yesterday. So um, if you were to try to trade this, this is your risk, and you would be trading for a test to the bottom of your green area there. Okay, so it's look like it's almost a 2-to-1 risk reward. Not really the best scenario, so let's be very careful on it. We got the weekly 20 down here as also. Uh, so we have to be very careful. Uh, not the not a situation that I overly want to be trading today. So basically, all three scenarios, because we are trading below that resistance, suggests the risk reward is to the downside as the primary scenario here. Um, so we'll see how it all plays out in today's session, and we'll go from there. Okay. So guys, I do want to point out here, our skew actually went up. We have one of the highest reads ever on skew as of yesterday. So they were putting on a lot of insurance that the markets are going to reject from here. So just be very mindful. Markets are really hedged here. Um, and unfortunately, you don't tend to get the big sell downs once big institutions have already hedged themselves. So just be very mindful of that scenario. If you're trying to make a you're trying to make a big bet that the markets are going to have this massive 10% drawdown from here, they've already they're already positioned for that eventuality. And so what happens is when you come down here, they're taking the hedges off. They keep taking the hedges off, and it bounces. So it's not it doesn't tend to be quite. You're not going to come in typically when the skews like this and see, in the first half an hour we're down 150 points on the S&Ps. You're not going. You don't typically see that. We'll see how it works out. Maybe there's a news event that calls me wrong, but uh, uh, basically, like I said, the markets are look to be fully hedged to me going into today's session, suggesting all it takes is a lack of downside pressure to cause a squeeze higher. So that would be my primary thesis with the skew being as high as it is, that we could very easily squeeze higher and to squeeze out the all the insurance has been put in the market. Okay. Thanks a lot for listening. If you like the video, please like it below. I appreciate all the comments you can at the bottom. I really appreciate all the feedback. Like I said, I'm still looking for 6,200 a situation. And now with the skew doing what it's doing, I mean, yeah, that gives us the opportunity for a short squeeze. If we had some sort of overnight, event that could squeeze us overnight positively, we could be instantly overnight in the 6,200, and then from there we could have some problems. But yeah, with the skew being right here, the contrarian view here is be really careful trying to push the shorts, in my opinion. Thanks a lot.